Hi, welcome back to the Florence School of Banking and Finance YouTube channel. We're at our annual governance conference here at Via Schifanoia in Florence, and I'm joined by Buchheit, who's one of our speakers and participants today. How are you finding the conference?
Very interesting, Nick. I was here, I guess, 5 years ago for the first one of these conferences. The issue in that day was, could there be a debt restructuring in Europe? And of course, a year later, there was pretty savage debt restructuring in Greece in March of 2012.
And your conference paper I have here is called Talking One's Way Out of a Debt Crisis. Can you tell us a little bit about that?
Yeah, well, if you go back to that period, what the European officials feared was contagion. They feared that if Greece were to restructure its debt, might the market see that and say, golly, if it could happen in Greece, could it happen in Portugal, Ireland, Spain, Italy? And so they were interested in containing any contagion from the Greek debt crisis. But they had a difficult choice because on the one hand, they could not come out and say openly, we will bail out Greece for two reasons. One was there is a treaty prohibition against the union bailing out member states. But second, and more importantly, the assistance to Greece came with some pretty severe fiscal adjustment measures. So they couldn't promise the market, we will bail them out without undercutting their ability to negotiate the fiscal adjustment. So they couldn't say, we will bail you out, but so they chose to say the same thing, but in a different way. They said, there shall be no debt restructuring in Europe. And if the choices are either a bailout or a debt restructuring, you don't have to say there'll be a bailout. All you have to say loudly enough is there shall not be a debt restructuring.
Indeed. What's the biggest difference in attitudes between now and your appearance here 5 years ago in terms of European political and economic infrastructure?
Well, we've learned a lot. Among other things, we learned that a debt restructuring in Greece, which did happen, did not bring down the Eurozone as some predicted that it would. It wasn't pleasant, but the market absorbed it with a great deal more maturity than some people at that era had said it would. The uncomfortable fact of life is that between 2008 and now, you can see the debt stocks of virtually every European country have grown considerably. Average debt to GDP then was maybe 60%. It's now well over 90. Now, the reason that doesn't preoccupy the headlines is that period is coterminous with the zero interest rate policies that have been promoted by the larger central banks. So the servicing of those debt stocks, although the debt stocks are 1/3 larger, servicing them is probably even less than it was back then. The risk, obviously, is what happens if interest rates return to anything like normal. And in Europe, normal would be 5 to 6%. So pro forma, your favorite country, with its current debt stock at an interest rate of 5%, and you'll see that would drain resources from government budgets at quite an alarming rate.
Well, is that inevitable, or is this the new normal? Is this just going to have to be the new normal?
I think interest rates will have to go up. I don't think we, as a community, have even begun to realize what the longer-term consequences of zero interest rates are. We've never seen it, certainly not in our lifetime. And when it started, people said, well, 6 months or a year of zero interest rates in order to get the economies going. In fact, that extraordinarily lenient monetary policy has not returned growth across Europe. And inevitably, zero interest rates will cause bubbles elsewhere. Why? Because people can't put their money in a bank and earn an interest rate on it. They'll put it somewhere else. So it creates bubbles in real property, in stock markets, and so forth.
So would you anticipate or recommend any more experiments in the near future?
No, I think at the moment everyone has to realize that while we've had a reprieve from the debt crisis, it's not necessarily over. And if it returns, and it could return, it would only take some shock, Brexit or an unexpected result of the US election, something, and all of a sudden the markets could again become skittish.
The political implications that they're talking about. So having said all that, do you consider yourself an optimist or a pessimist?
I'm an optimist in this sense, that the markets and the financial system is far more resilient than we give it credit for sometimes. It has, now, part of it is undoubtedly that zero interest rates and quantitative easing have flooded the market with liquidity, and it must go somewhere. But look, there have been pretty severe crises over the last 40 years, and civilization has not ended. So the markets are more resilient sometimes than we all give them credit for.
Okay, well, civilization not having ended, I can work with that. That's good.
Right.
Lee, thank you for talking to us.
Thank you,
It's been
Nick.
a pleasure.
Thank
Cheers.
you.